Have you ever wondered how new blockchain technology could transform your real estate investment journey? So I want you to picture this: increased transparency, increased efficiency in capital raising, all thanks to new tech. But here's the catch: without learning from FinTech leaders, thought leaders, like we are in our upcoming episode, you risk falling behind in a rapidly evolving industry. Imagine the missed opportunities and potential setbacks from not embracing this new wave of innovation. So that's why understanding how blockchain can revolutionize capital raising is essential for any investor looking to stay ahead in today's market. So tune into our episode and discover the game-changing advantages that await those who look to explore the potential of blockchain in real estate. So I want you to stay tuned, listen in, take notes, because here we go.
Are you a busy professional in the DMV area looking to invest passively in large multifamily syndication deals? Do you want to meet with other like-minded investors of all experience levels to learn, network, and discuss some amazing investment opportunities? Then look no further than the DMV Apartment Investor Community in-person meetups. Our monthly meetups offer a space for you to connect with other investors, learn from industry experts, and discover lucrative investment opportunities in large, multifamily syndication deals. Whether you're an experienced investor or just starting out, our community welcomes everyone who is interested in growing their wealth through passive investing. Join us at the DMV Apartment Investor Community Meetups and take your first step towards financial freedom today. Visit our website now to learn more and register for our next meetup. We'll see you there.
What would you do if you had the freedom to pursue the things you enjoy the most? How incredible would it feel to have the resources to pursue your passions fully and live life on your terms? This is Brandon Jenkins, host of the Capital Stack podcast and principal of Birch Prosper. You might have heard that 90% of the world's wealthiest people attribute their wealth to real estate investing. Well, guess what? It's true. Investing in real property continues to be the greatest generator of wealth all over the world. So join us each week on the Capital Stack podcast to hear about how commercial real estate group investment opportunities can help you reach true financial freedom and give you your time back. Hello, everyone. What's up? And welcome back to the Capital Stack. I'm your host, Brandon Jenkins. So as much as we love the private equities and private placement industry on this show, we have to acknowledge that there's a need for more platforms that offer a streamlined solution for investors in an all-in-one type of format, and that focuses on compliance and transparency, right? So today we're going to have a conversation about that. And my guest for today is Oscar Jofre. He's someone who can tell us all about that. And so we're excited to welcome him to the show. So Oscar, how are you doing today?
I'm doing great. I love all the words. Transparency.
There we go. There we go.
There we go.
All right. So Oscar is a co-founder of KoreConX. It's an all-in-one platform for private capital markets. KoreConX brings the infrastructure of the public markets to streamline the global private market. So it's a really cool solution. He is a globally recognized top 10 thought leader in equity crowdfunding and is sought after for his perspective on blockchain, FinTech, compliance, shareholder management, alternative financing, and RegTech. So a very, very heavy focus on efficiency, transparency, compliance, which is, again, absolutely critical in this business. Oscar also founded the BabelFish Corp, which is a software as a service multilingual translation portal. So there's plenty to discuss here. And again, Oscar, just really excited to have you on the show. But why don't you kind of fill us in a little bit more on your journey, your background, and kind of what brought you to where you are now?
Thank you so much. Well, it's when you're an entrepreneur and seeking capital, you know what it's like. We're turning every page we can in order to make sure the opportunities exist. And for me, it was about 14 years ago when I met David Weil, the father of the Jobs Act in the United States. He was former vice chairman of NASDAQ at the time. And literally, it's sort of like having someone completely turn your whole life around. from a perspective of everything you thought about how to raise capital or where capital is just completely transformed. And what I mean by that is we've all been trained to only look at capital a certain way, which is, okay, I have an idea. I got to go to my family and friends. Okay, I'm done. Okay, no. Now you can go to the bank. Okay, where do I go next? The venture capital. Okay, and then private equity, and then go public. And that's it. That's the only route that people have been given. What people don't realize is that the vast majority of individuals, let's just take the United States, for instance, 99% of Americans have never been able to participate in the private markets. Mm-hmm. People go, what? That's right. 99% of Americans have never been able to give a chance to participate until President Obama in 2012 signed in the Jobs Act. Up until then, it was only the 1%ers making money and getting fatter and richer and so on. And David Weil made that happen. And what does that mean? It means that you now have another chapter in your journey of capital raising. And that's when it began for me. This new chapter that is opening, this new way of capital raising is not going to be like any other form. What does that mean? It means that you're going to need to change your approach, because now I call it getting naked. Imagine being on a stage of 80,000 people and you're naked and you have to stand there. You can't hide, you can't cover anything up. You just have to stand there. If you're ready for that, this is the journey for you. So I know I'm being blunt about it, but it's one of the most exciting things that's happening in the, let's call it the 21st century for all of us, because it really is that exciting. And more importantly, for anybody who is of color, a minority, Latino, women, LGBT, whatever that minority class will be, you now have an equalizer, which means that who cares if the banks don't want your business? Who cares if venture capitalists don't want to invest in your company? You now have the ability to target 233 million Americans to invest in your company. I have to believe that there is like-minded people in there who believe in the same cause you do and who will invest in your company.
Wow, absolutely. That's an incredible way to sort of summarize that. And at the end there, I think that's very powerful, because, the reality is in the past, there were things that different types of opportunities and pathways that were blocked, for underrepresented communities and minorities. And so that's just the fact of it. And so being able to have now this solution that opens up a whole new world of opportunity is just incredible. So, but let's talk about sort of the mechanics of that just a little bit as well. And again, appreciate you for sharing kind of your journey. I appreciate that. So the mechanics of how it works, so how does someone then, in this new space tap into that 230 plus million Americans and say, listen, I have an opportunity for you. How do you go about doing that?
So the regulators, when Obama signed in the Jobs Act, it took the regulators a couple more years, and the regulations are so smooth. I mean, there's no better place in the world than to be in the US. Look, I'm Canadian, and I'm honestly telling you, there's no other place in the world that has regulations that are available to you today. And some of you listening may go, but I got to do this, I got to do this. You would have to do it anyway. So you need someone else's capital. You need to demonstrate you're real. So what are the things that they've done is they've made sure that when you are ready to raise this capital, so let's take one of the regulations called Regulation CF, or Regulation Crowdfunding, as it's known sometimes. You can raise up to $5 million every 12 months from anybody over the age of 18. Look at that, anybody over the age of 8. So the regulators say you can do this in two ways. Number one, you can find any of the 88 platforms we have already authorized for you to go there and raise your money, or you can work with a FINRA broker-dealer and raise your money directly on your website. Okay, that's number one. Number two, we need you to have a lawyer to follow your Form C. Number three, we need you to have audited financial statements. And this is the part where people go, but wait a minute, my business is brand new, how can you audit it? They can still audit it, it's just quicker. Obviously, for companies who already have a going concern, it's going to take a little bit longer, but that's one of the requirements. And then number 4 is you need an SEC registered transfer agent. So what does that mean? It means that the regulators are giving you the ability to raise $5 million from anyone. They want some safeguards to make sure that the investors are being properly managed. Your book of records, meaning the ownership structure of the company, is being properly managed by a third-party company that is regulated by the SEC. So all of these pieces come together. So what's the harmony in all of this? The harmony is that it allows you to do it over the internet. You can't be doing this over the phone. It's just not efficient. Imagine if people were investing as low as $10 in your company. It would have to be extremely efficient. So that's where technology comes in. You need an infrastructure to glue everyone together. So to be able to post your offering, to be able to find a lawyer and auditor very quickly, so you're not wasting time and effort and looking for these things. And then to find a broker dealer who will do this offering to do your compliance. And then for your investors to click the invest button on your website to then invest $10 using their credit card or their ACH, and then immediately to see their shares showing up on their portfolio. All of that is an infrastructure that we built, but anybody else could have built as well. But we saw it years ago that this was the future of where we were going. And for companies, that's 5 million. There's another regulation that allows you to raise up to 75 million every 12 months. Whichever regulation you use, the same regulatory component pieces you need are there. They're there to protect you. And people go, but no, it's making, no. They're there to protect you. Mm-hmm. Because see, if you do it wrong, you're going to end up in prison. See, that's what they do. They're not there to, take all your money. And, some people have said negative about lawyers and auditors and all that and broker dealers. They're not going to be your best friends, but what they're there to do is fulfill a regulatory requirement so you don't end up on the wrong side of the securities law. And there have been many, as we all know now, that, when you want to go against the SEC, you don't win. You lose.
You lose every time.
You lose every time. 100% SEC, that's their track record. But overall, look at that. It doesn't matter if you're blue, black, white, yellow. It doesn't matter what color you're. Why? Because people are coming to you because they know you. It's one of the most exciting. Look, I'm an immigrant myself. When I arrived in Canada, English was not my first language. I was born in Chile. So I might have not been born with all the issues, but I dealt with my own issues living in Canada growing up. And as you get older, you learn to understand that you feel sometimes that there's not enough choices. This to me was look, it came to me at a time in my life when I was already in my late 40s. People would go, okay, well, you're already ending of your career. No, that's when it's just getting started. Yeah. That was 14 years ago. I was pumped then. I'm pumped even more now. Why? Because it's working. Mm-hmm. It's working. When you see an entrepreneur, I have one, Reverend Dwayne James, I think that's his, and he has a company called I Have a Dream. I know he was part of the Martin Luther King movement. He's given an opportunity to raise money today in a way that, prior to 2012, it was just in his head. He couldn't do anything about it. And if he even tried, he would end up in jail because it would have been illegal. So now he can get people. What he's trying to do is trying to help Black Americans in the state of Illinois to be able to get mortgages for homes, which we all know there's a problem. So all the opportunities would have never existed, never, had it not been for the Jobs Act. So we have to look at the tangibles of capital, job creation, but what is it really doing for the rest of us in the market? And that's what excites me every single day about what's available.
Yeah, absolutely. I think that's really exciting. And I want to, and let's talk kind of about the mechanics. I'll mention something really quickly for the listeners that, for those of you who are trying to get into the active side, or you're fairly new to the active side of the business, by having a platform and a portal where that's sort of front facing or investor facing, you also have, in my opinion, it gives you a much more professional look and feel to your business. There's nothing worse than, I've seen some sponsors on deals where they really don't have any kind of interface for an investor to go and interact with and kind of get a sense of who they are, or to look at their deals or what have you. And it gives you a different sense of someone that actually has a sort of a professional portal or platform. But so as far as CoreChain is concerned, what's the interface look like? So is this, if I'm a sponsor, I go and I log in, I have, I get it all vetted and approved through you all. And then now is that then a platform where I can display my deals and investors can go and look at the deals? What's kind of just at a basic sense, what's the layout of the platform look like for sponsors and investors?
Yeah, it's a great question. So first of all, KoreConX is really, as you described it at the beginning, we're the infrastructure. What does that mean? We're way at the bottom. What are we doing for you? We're trying to make sure that whatever you're transacting is compliant. So how it looks, how it feels is exactly what you already have. All we do, we plug it in to our infrastructure to make sure that when you are transacting, it's transacting under the SEC rules. So we made that decision a long time ago that it wasn't really about us. Nobody knows me. They know you. And there's a lot of yous everywhere. And so when we build KoreConX and our entire infrastructure, which has a few layers, it was built around so it would be under your brand, your color, your URL, your look and feel. Because otherwise, you're imposing the very essence that killed us all from back then. And this is meant to open it. And by doing so, you can operate knowingly that you're operating fully compliant. What does that mean, fully compliant? Because people go, well, I can do KYC. No, it's not just KYC. When you're doing securities law, it means that all the regulatory participants are there, the lawyer, the auditor, the SEC transfer. Okay, so they can be in the background. Yes, of course, but they need to be there. The FINRA broker-dealer. Why do I need a broker-dealer? Well, think of it this way. We drive a car. You need insurance. Why? Because what if? It's the what if. So in securities law, you pay a broker-dealer a very small percentage to be in the background. But once again, to make sure that every investor you're bringing in is being properly vetted in ID, AML, suitability, sanction screening, AML meaning anti-money laundering, ID, identification, all these little bits and pieces that are important, because all you need is one bad actor in there and then boom, it destroys your offering. So the broker is your insurance policy. It takes care of all that. And again, all of that is fluidly happening directly on your website. And then once the investor is done investing using credit card or ACH, their securities are delivered to them electronically. Again, on your site, they can view, oh, there's my 100 shares on this particular portfolio. Excellent. And then I'll invest again. And depending on what regulation you use, Brandon, you can even give them the ability to trade them. And people, what? That's right. The regulators had the foresight to not only give you the ability to raise capital, but also allow you the ability to give those investors the ability to trade. So that was one of the big harmonies of regulations. It wasn't just saying, okay, everybody can invest, and then people are stuck. Okay, what do I do with this? What can I do? Well, now they can trade them. They can sell them to a private buyer. It doesn't put any pressure on the company going public, which is fantastic. You remain private, and they can sell them. Now, people don't go in immediately to buy and sell. That's not why they're doing it. They want an ROI. But if they have to, there's no lock to restrict them from doing that. So you have to admire the regulators for seeing that. And that power comes back to you again to be able to do it. So one of the key words you said at the beginning, transparency. So I'm going to keep coming back to that a lot because, so look what you got. You got two regulations.
one allows you to raise up to 5 million. The other one allows you to raise up to 75 million. You're now in control. You get to dictate. You get to put that out there. So that comes with a responsibility. That responsibility is transparency. You must be transparent to that audience. You need to communicate differently than you would have communicated with the one percenters.
Yeah.
The one percenters are there. They want their return like everybody else. But this audience, they believed in you.
Mm-hmm.
As much as a project, it's you they believed in. So you need to keep, engaging with them, because that's why they came to you in the first place, because you engage. And that could be from educating them, providing them information. I have one client that when they first got started, they couldn't connect with the investors. They couldn't figure it out. They could go, Oscar, this is such a great real estate project. I go, I know, but the problem is you're treating them like investors.
Yeah.
You have to look at them differently. These are people that are going to your buildings, maybe the renters. Talk to them and now get them to invest in you. And it's a very different narrative. And therefore, that responsibility of transparency is even greater. So what are we talking about here? Well, in money, as I said in the beginning, it's a funny thing. There is these pockets of money, and each one has a pro and con. So when we think of venture capital and private equity, the pro is that they can write one check and you're done. The con is you may not be running the business.
Yeah, they'll be in control. Yeah,
they'll be in control. So you got one controlling shareholder directing the future of the business. And sometimes they'll even control even further, where they won't put any more money in, forcing you to shut down. So you have to look at that. So here you get to put the offering on your terms to everyone. Not one person will control, but you have a responsibility to them. And if you can grasp that and you can nurture it, you can go back and back and back. I've seen companies do it after 9 years, over and over and over. And the crowd keeps coming back over and over. Why? Because they believe in what they're involved in. See, that's the interesting thing. Making money is not just simply putting it in. If they wanted that, they go to the stock markets and they can get that any day. This is different. They need to believe. Why? Because if they believe in the story that had they put $1,000 in Elon Musk company, in Tesla, way back when he first got started, and it's now worth almost $500,000, you gotta believe and you gotta wait. I mean, it wasn't worth $500,000 the day after. It took a decade to get there. You gotta be patient. And during that time, what you do as a CEO, you gotta evangelize them. You gotta get them to participate. And it's wonderful.
It is. I think you're very accurate in that the approach and the story is kind of different when you're approaching a retail investor versus kind of a larger investor, where at the retail level, at the individual level, it's much more I almost say emotional, maybe not quite, but it is very intimate. And it is very much about you and your story that they're believing in. And so even though the educational piece still needs to be there to make sure that they are confident in what you're doing, that they feel good about what you're doing. It's much different than, speaking to kind of a larger outfit or a venture capital or a private equity firm, where they want to see the numbers and they want to see what you think the numbers will be. So this whole mantra of kind of under promising, over delivering that you see when we deal with kind of the retail side, certain private equity investors won't want that. They'll want you to say, hey, if you think this is what it is, put it here, and then we'll look at the numbers and be sort of a colder review, I would say. So there's definitely a difference there. One thing that, on the topic of transparency, because I know that there's a blockchain plays a role in this, correct? And so can we talk about that? I wanted to dig a little deeper into the role that blockchain plays into your firm.
Yeah, it's a great question. I mean, it's coming back to transparency and coming back to that, earning that trust. And when you're dealing with individuals that have never been given this opportunity to invest, they're gambling. Well, not just gambling, they're taking a risk. One, they love your video, they love who you are, but they haven't touched you. They maybe some have, but not all. You're not going to be able to reach everybody. So how do you give them the confidence level that I gave you $500? How do I know that I own this? So the SEC transfer agent plays a great role in that. But when you're managing thousands and thousands, hundreds, maybe a million, you need something more efficient. And then if people are doing transfers and trades, that number can easily grow and double. So at KoreConX, we have the world's first, and in the United States, the first SEC qualified blockchain technology. What does that mean? We went through the front door of the SEC. We showed them what we had. We said we follow the rules. We're not asking for anything special, and we will continue to do so. Our environment is a permission-based, meaning that it's not available for the general public because it is private markets, private capital market, the first word, private. Your information is yours. People shouldn't know what you own, only you, the company, your lawyer, and so on. So every share that is being acquired in your company is actually being put on the chain. That immutability, that ownership, that investor protection is everything. That investor will never have to ever worry that whether I own those $500. If you one day, something happens to you and you didn't update your books, it doesn't matter. The book's already there. It's already set in stone. It has all the rules to protect the investors. You can't erase them. You can try. See, all those things go through the mind of an investor. Oh, I've heard the horrors that, one day I put in, then they tell me they have no record of me.
Yeah.
That will never happen in our infrastructure. Today, we've done billions and billions of shares that we've tokenized. That's another word, or digital securities. We put on the chain, and investors have protection of ownership. We can validate, quantify, yes, you do own 1,000 shares in that company. No matter what the company's telling you, you own 1,000 shares. And if the company argues that, we can show it to them. Why? Because at the time of the transaction, everything was there. What does that mean? Well, they entered their data, they paid for it, they signed the subscription agreement, and the company took the money. And see, it's not like, there is no tracking. The chain is tracking everything. It's creating a chain of trust for that transaction. Today, up until blockchain, we didn't have that. And there were times, scary as it sounds, that people did that. I'm not saying all entrepreneurs did that, but there were some malicious entrepreneurs. And sometimes they did it because they were malicious. Sometimes they did it because they were just overwhelmed. Oh my God, what am I going to do? So all these shareholders, I can't keep track of it, and so on. So technology has made it easier. We don't need to be afraid anymore.
Yes.
You don't need to be afraid. And for companies, you now have a way of giving something to an investor that they've always wanted. Number one, investor protection. This does not mean that I'm saying this company is going to make it or they're going to be a home run. That's not, I'm just saying that the investment you made is real and it's going to be protected, and you will be there like a tombstone that you are the holder. And then, of course, transparency. They can always see it. They can always log in to view it, regardless, not that, hey, can I see my shares? Well, no, not this week. I gotta get a hold of my lawyer. None of that. Yeah. They can just log in, or the mobile app. There's my shares. I want to transfer some to my daughter, to my granddaughter, whatever it is. And they're in control, and they should be. And that's the power that the Jobs Act is given. So you can see the balance here. So one, they've given it to the entrepreneur in order to raise the capital, and they've also given it to the investor. And they put the intermediaries in the middle there to make sure that both parties are doing it correctly. And every once in a while, you got to keep educating the groups. You got to go, hey, Brandon, you got to do this before the end of the year. Okay, thank you. And Brandon, we got to deliver that to all the holders. Okay. And then you got to remind the holders, what their role is, what their expectations should be. And that education is important, because the more people we educate, the greater chance we have. And this is why it's important for all of you to remember this. The greatest lesson that I got taught by David Weil as an entrepreneur was, Every single day, there's $36 trillion sitting in US bank accounts today and growing. The only difference is that we're here and the money's there. Up until 2012, we had to go by these intermediaries and that was it. But the money went from them to there. Make no mistake, it wasn't their money. It was everyday money, your money, that it went there. Now, you have to do it. The only difference is it's a little dark, meaning you don't know where it is. But we're helping with that. We're putting lights, opening up. The more people become aware, 10 million Americans have now participated investing online with these companies. Anything from, from technology to biotech, medtech, life sciences, real estate, and everything you can think of. Family office, family real estate. You can think of commercial, cannabis, alcohol, whatever. It agnostic, as long as the company filed with the SEC and got qualified to raise money. Who are we to tell you whether you're a good enough company or not? You now have the ability to do that. And if everybody follows that, you have an opportunity, and a company does not need to be a $1 billion company. This is another important thing everybody needs to understand. Not every company needs to be $1 billion to make a difference. The one company for me, like after 14 years, I still remember this company. A young lady raising $50,000 to buy sewing machines. Sewing machines. If it wasn't for the Jobs Act, she would have never been able to do that. By buying those sewing machines, she created jobs. And she had a little shop. You see? That's all it is. And you go, wherever you go in America, Washington, New York, there's little shops. We need those shops. They serve a purpose. They serve a great purpose for all of us. So imagine in your neighborhood, if your local dry cleaner is going to be shut down and now you got to drive another 20 kilometers to get your dry. Is it worth it to you to give them $100 to have an ownership and keep them there? It's a no-brainer, right?
That's very interesting. I mean, it kind of speaks to, the direction that this is all going. I think, there's a couple of things you mentioned in there that I really want to focus on that for me sound like they're kind of almost game changers, really. One of which is you mentioned the transferability of shares, and so that's a pretty big deal. There's two things I want to talk about. One is transferability of shares, but the other one is for someone who's coming in who is not familiar with blockchain, meaning. So I know that the blockchain and cryptocurrency are two separate things, right? Cryptocurrency is on top of blockchain tech, but that doesn't mean that all blockchain is cryptocurrency. Now, there's some people who aren't aware of that. So that's my first point that I wanted to tackle, is maybe clarifying that just for people who aren't aware of that you can use blockchain for contracts. It can have nothing to do with cryptocurrency. Example. So if someone doesn't have, say, a cryptocurrency account, they might be thinking, oh, well, I can't participate in this. That's not true. So maybe just clarify for people who are not clear on that.
Yeah, thank you for that. Sometimes being in the tech sector, you kind of so true. And great analogy that blockchain is just something that is there. It is nothing. It's whatever you want to make it. And there are people who are creating these cryptocurrencies. So that's a byproduct of it. And no, this has nothing to do with that. There's no wallets. You don't need to have any of those things that you hear in that world. The crypto, you hear wallets and people robbing you. No, we're using blockchain in another case. I'm going to give you another example of this. We don't think of this much, but people who are in the medtech space, people who receive heart transplant, they're given a device and they're given a serial number. And for the very first time, I applauded this group. It's called Traceability. They created an application on blockchain to trace the ownership, the transplant they made. So if there was ever going to be a problem, there was no issue that this was put in Oscar's heart and it came from this manufacturer and it was put by this doctor. That was just phenomenal. That's a real life case. All the other stuff, it's a totally different world. We don't play in it. It's illegal, first of all, in our world to be involved with it. We can have no association with cryptocurrencies because the SEC and FINRA have indicated, what's going on right now. They are illegal at the moment. I'm not telling people not to play in it, but I'm just saying be very cautious. We're using the baseline technology for another purpose, and in this case, it's a great business case.
Yeah.
And what's it do? It's going to reduce the friction of finding records, excuse me, finding records, making sure that immutability of ownership. So the value propositions of the technology are being used in so many different ways. People are hearing about NFTs, another one. And people go, well, blockchain is an NFT. No, NFT is created within blockchain.
Mm-hmm.
And it's a great, innovation. So the fact that someone took a painting and made it into a digital image and then you buy it, it's fantastic. And the fact that they take that same image and they give little bits and pieces to everyone, it's even more innovative. But the fact remains that the baseline technology can be used in different cases. You may not even realize it today. Your own bank is already using it. So many large institutions have already adopted it. And you wonder, well, why don't they say anything? Well, the same way they didn't tell you they were using other technology before.
Yes, right.
They're just using whatever it takes to make their business more efficient.
Yeah. That's right. And that's why I wanted to highlight that, because I think, just to be clear, for the listeners, look, regardless of your stance on, and I wanted to make sure I focused on separating and decoupling cryptocurrency from blockchain, because that's the prevailing thought for people who are not in that space at all, is that they're linked, and they're not. And so I wanted to be very clear on that, regardless of what your stance is on some of the things that have been born out of the blockchain technology. Blockchain itself is here to stay because it's about transparency, it's about traceability, it's about that kind of thing, and preservation of your position and whatever it's being applied to. So it has nothing to do with your cryptocurrency, those things directly. Those were built using blockchain tech. Okay, so so now the other point that is very important is the transferability piece, because this is something that, in my opinion, is potentially a game changer. Even though I believe what you're saying is that in the Jobs Act there was some room for it in there, but in a practical sense, it's now something that is much more feasible, even in, say, a syndication deal, as an example. So maybe explain that. So someone has shares of a company that's a part of a syndication deal. Help us kind of understand then the transferability potential of those shares to someone or to an entity.
Yeah, exactly. If you're obviously, if you've done syndication, you've been doing it under the Reg D rule. And we all know that doing a transfer with Rule 144, it's costly, time consuming, and nobody ever wants to do it. Mm-hmm. It's just, it's got all so under the Jobs Act, the regulators really, as I said, they did a balancing, and that balance is the following. So in Regulation A, where you can raise up to $75 million, the minute I get my securities, I invested, I passed KYC, the broker-dealer has approved my investment and closed it, and I received my 10,000 shares, I can begin to transfer them. And the company is doing its work. So how does it happen? So the investor would log in, they would enter who they would want to transfer. So quite often people are buying shares to give to their family members, or maybe they sold it to someone, but it doesn't matter who they did. They enter all the details. Then our platform does a KYC automatically in the background on the new individual, and the transfer agent then approves it. If all the information is there to make sure that it's ready to go, they approve it, the shares are transferred, the new holder goes, I had 10,000 less 1,000, I got 9,000, the new holder logs in, they got 1,000. When the company logs in, they view their cap table, they go, hey, look at Oscar had 10,000 shares, he transferred 1,000 to John Smith. So all of this is fully transparent for everybody. And you have to use technology, because it's going to kill you how people do it today. They use documents. I mean, This is crazy. You can't do that with 50,000 shareholders.
All right.
During Christmas, we had this, the busiest time for us for transfers is in December, when people are raising money and grandparents are buying securities for Christmas. And in one case, we had one investor investing, I think, $250,000. And what he did after he was approving all that was automatically give it to all his grandchildren.
Wow, that's awesome. Okay, let me ask you. I mean, this is really good stuff. Okay, so and it's for the sake of the listeners and even myself in some cases, the terminology. You mentioned cap table, you mentioned KYC. What are those two?
So the cap table is where, so every company has a ledger where every person who put in money in your company with a date stamp and all the, so that ledger is a living thing. So today, Oscar has 10,000 shares. Tomorrow he transferred 1,000, and so the ledger keeps track of everything. So the company's authorized. So we have a cap table management that allows the company the ability to manage its entire cap table. And KYC stands for Know Your Client. So as a transfer agent, we're almost like a broker dealer. We still need to do ID, AML on that new person that the securities are being transferred, because securities is money. So you have to, and all of that is happening within the platform. So no more paper shuffling, no more of that. Is one makes the request, the other one enters it, someone approves it, all electronically. That was never possible 10 years ago. Today
Awesome.
it is.
That's incredible. Okay, and here's the next thing that I want to get clear on. So, because we started to talk about different SEC filings, Reg D, so which I'm sure the listeners here are much more familiar with. Reg D 506B, 506C, where in the 506B you cannot solicit, and you can have some, I think 35 sophisticated or non-accredited, sophisticated, and unlimited accredited. If it's a Reg D 506C, then you can publicly solicit, and you can have an infinite number of accredited only. Okay, but I wanted to make sure I distinguish or differentiate that between what we're talking about now, though, where you have this where it's Reg A and you have kind of transferability. So is that does Reg D, any type of Reg D filing, allow for that, or is it only Reg A that allows for what you mentioned in terms of?
So first of all, just to clarify, so Reg D, 506B, and 506C have one major limitation that is really important for everybody to understand. You cannot have any more than 2,000 holders.
Yeah.
That's it. That is your limit. For Reg CF and Reg A, the regulators, once again, said you can have unlimited.
Okay.
So that is the reason why you can do transfers and trades to as many where in Reg D as you can, because you have that issue of, first of all, the individual needs to be accredited. Number two, do you go over the limit of the 2,000? You never have to worry with Reg CF and Reg A. For the investor, the security is the greatest gift, because they're not bound by all the other rules that Reg D has. But at the same time, they don't get to invest, $5 million, where in the Reg D world, one investor could if they're accredited. So there are, people need to manage it based on what they feel their community can have. But based on what I've seen in the marketplace, is that the market today has finally recognized this. I have one company in real estate. All they've ever done is Reg D. And when they went out, at first I was going, wait a minute, how come your minimum investment is not $100? Goes, Oscar, I'm still going after the same Reg D guy. And it took me a little bit, and I'm going, you know what? You're a genius. You figured it out. So try to understand this. In the Reg D world, you go after that accredited investor, he or she can only trade amongst other accredited investor, and the company has a limit of 2,000. And they have to go through the accreditation. In the Reg A world, the investor does not need to go through the accreditation. They can invest big amounts. So they make the minimum investment $100,000, which it looks like it's shuttering everybody up, but it didn't. every single one of those investors about those blocks were then able to sell it to non-accredited investors and have a bigger spread. So there are so many creative ways to using these regulations. Another one is called what we call the marketplaces. The marketplaces in real estate are going to be huge in the next 2 to 5 years. Why? Because the traditional way is you raise capital for one entity or one project, and that's it. Under the Reg A umbrella, the regulators allow you to do what is called an LLC series. So you raise money on the top umbrella, and you put properties together that equals 75 million. So let's say it's about 30 properties. And you put all of this under your platform, your website, and so on. The investor is able to buy and trade all of it on your website with all the regulatory components. As I said, I mean, we're living in the most exciting times because everybody's given a chance to participate. Everyone is given an opportunity to grow their businesses or start their businesses because the capital is there, but you're going to have to earn it. It's not just going to, people go, I build it and they will come. Good luck with that.
It doesn't work.
It doesn't.
It didn't work at all. But one thing that I like that you've kind of mentioned a couple of times that we're in a really good. It's just a great time to be alive because even though sure if you build it they will come, that doesn't work. We do, however, have the benefit of the world being a very small place right now. So you can put something out on the internet and you can literally touch the world with a piece of content or a few pieces of content. So the ability to speak to people at scale is unprecedented. So but yeah, and I just think that this is really, really, really amazing stuff here. So, and I want to ask now, what are some of the, not pitfalls, but what are some of the risks, of, let's say someone's used to the Reg D world and they want to shift over then and say, you know what, I think I want to now play in the Reg A space. What's some of the things that they need to be cautious of or aware of in order to give themselves the best chance to succeed?
That's a great question. And the best way I'll answer it for you here is that the challenge isn't that there isn't any risk in the regulation. Actually, it's actually better. It's the CEO. They have to transform themselves. And here's what I mean. You have to transform yourself. You're not going after that high net worth, selling them on the ROI anymore. The ROI is going to be there. All of the basics, everything you've done before, all of that's there. But now you're reaching an audience that never even had a chance to. So you got to go back to the basics. The same way you asked me, okay, Oscar, let's talk about blockchain. Let's go back. Same thing. And some people go, oh, that's a lot of work. You know what? That's the beauty of it. You do the work now, look what it pays off. Because see, here, you're always limited. And the accredited is moving the market based on market conditions that are out of your control. Here, these individuals, it's all in your control. They're following you. They follow your narrative. So you have to transform yourself. But the same way that I transformed myself as a CEO of my company. Like when COVID hit, there were two things you could have done during COVID. You could have gone under the table and hid and said, it'll be okay, things will come back to normal, or immediately embrace it as we did. We shut down our offices, okay. And we brought everybody at home. Everybody was happy. We went from a company of 10 individuals to 74. So what was different? I had to be different. I couldn't manage people the same way. I couldn't micromanage them. It would drive me nuts. People put software in them. No, you have to trust. So these are the same characteristics you have to do with yourself. So you have to transform yourself, how you're going to talk to this audience. And when you do, so the risk is, can you do it? Do you have it inside you to change the narrative on how you're going to approach? Can you change? The risk is, can you identify, can you speak to the everyday person that has never heard you before, or maybe has, but never been given the chance to participate because the only way they could, if they put in $25,000, and now you're giving them a chance just with $100. See, it's easy, but the risk is you. It's only you. The rest is the market. And how big is the market? Well, let me put it this way. Real estate is the number one regulation that how many people are shifting from Reg Ds to Reg A daily. Why? Because if you're going to advertise, why not get everybody, not just, right now, the way you're doing it or others in the Reg D world is you're hoping to get that 1 in a million. I mean, really. And instead, you're reaching out to everyone. Hey, wait a minute, $100, I'll get a piece of that. And communicate. You build a profile around the people who believe in you. And next thing you know, you're building communities all over the place. I'll share
awesome
strategy with you. At one company that I share with everyone, because to remind everyone the power of people. People use the word crowd, but I'm just going to say people. So this company based in London, UK, with a brewery. So if anybody's ever been to London, every pub has a microbrewery. So there's no distinction between one or the other, and they got funky names. And this one was called Brewdog, and Brewdog wanted to raise capital. It raised a little bit in the UK, but it didn't do very much. It came to the US, created a company in the US. Brewdog has raised now neighborhood of $300 million.
Wow.
It has franchises all over. Brewdog, restaurants and microbreweries inside. All the money came from the crowd. They couldn't get enough of it. And why? Because he was thinking of them, not as investors. He called them punks, equity punks. So the punks wanted to be part of this. They got a badge every single time a new store would open. They would get a badge and they would collect it like Boy Scouts, and so you build a community and people believe in what they're doing. And that is the power of people. People is the money. And as long as, so again, $36 trillion is not held by one family or it's held by Americans, 233 million Americans. Okay. And so you're here, it's there. It's time for you to realize that once you make that shift, the rest, as they say, is history.
Wow, man, that was incredible. That was incredible. And I just think, again, that to me, this is really exciting stuff. And I think that it's definitely the present and certainly even more the future of this industry. So I really appreciate it. So Oscar, again, this has been really incredible. We're getting kind of close to wrapping here though. So I wanted to ask you, so if someone is, listening to this and in this case, we'll actually talk about on the active side, because normally I ask this question for a potential passive investor, but someone's an active investor and they're on the Reg D side, they want to switch over to the Reg A side. What is an action that they can take today to facilitate that?
So first thing before you do anything is get educated. Get a hold of me. I have published, I have a number of books, free books. We have the largest library of video library that you can learn from experts, lawyers, auditors, everybody. Learn the how to, learn everything, learn the language, learn the lingo, learn your responsibility. And when you're there, and you can do that while you're getting everything prepared, but you should do that because you should never go into something without knowing everything that you're going to be involved in. And I'm easy to find. I'm on LinkedIn, Twitter, Facebook. If you email me, I'll email you a copy of my ebooks. They're all in PDFs and they're very easy reading. Remember what I said, I'm an immigrant, so very simple English. So the idea is the book was written to help investors understand how it works and for companies to understand what they need to do and the responsibilities for both. And the more educated you are, the better it is and the more fun you will have in using these regulations.
Right. All right. So I'll include that information in the show notes. Is there any other, how else can listeners maybe get in touch with you or get a hold of you or see some of your content? Are there any other things that they need to tune into?
At the moment, I'm doing a lot of public speaking, but if they email me, Oscar at KoreConX, KoreConX.com, I will respond. I mean, I know what it's like being an entrepreneur. I've been an entrepreneur all my life. So part of our journey today is we want to help you and your listeners to make sure they understand that you're not stuck in a box. This is the only lane. You have more lanes. You have another chapter that you never even knew about. Okay, that's what I'm presenting, and it's real. It's Last year, our sector raised $151 billion. Wow. This is exciting for us. We're making a difference, and it's just getting started. It's just getting started.
Well, that's incredible. Again, I mean, I like I said, I really appreciate the information, appreciate your expertise and your perspective here today, Oscar. So very exciting stuff. And again, thank you so much for adding value to myself, to the listeners. And I'm just looking forward to seeing kind of your company and firm and industry continue to grow. So thank you so much for your time.
Thank you, Brandon. Appreciate it. Thank you.
As always, thank you so much for tuning into the show today, brought to you by Bridge Prosper. If you enjoyed today's episode and you'd like to learn more about commercial real estate investing, please like, subscribe, and share. And we'll see you again next week. I'm Brandon Jenkins, and this is The Capital Stack, where we help you learn, apply, and prosper.